What's up everybody? Welcome to the Stocks channel. My name is Cory and today we saw high volume selling after a strong rejection from the critical risk level that defines this bear market, and we now have FOMC in the rear view mirror. Are we getting ready for the next bear market leg lower? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 2.51%, and we did see that very high volume selling day after we did see a very clear rejection from the resistance level that I think defines this bear market. Remember, I've been saying that this is a bear market, which means the bulls have to prove everything. And right now we have no confirmation that the bulls are breaking out of this bear market with a high volume rejection from the critical risk level. Remember, the bulls had to break 390 and the bears had to break 378. And as you can clearly tell, the bears are still in full control of this bear market, which should come as no surprise. This is a bear market until it's not, which means we need to see SPY breaking and closing over 390. And right now we just have what looks like another lower high as we're starting back into the next leg lower of the bear market. Now you can see on this high volume rejection from resistance, we also did break the support trend line. So this is very clearly looking like a very powerful bear market rejection from resistance, because you never want to completely ignore high volume selling coming off of a very critical resistance level. So right now the only potential support for SPY in the very near future is going to be this 20 simple moving average at 372. And if we start breaking below that, we are very likely heading back down to at least retest the 200 weekly simple moving average right around 358. If SPY can hold above 358, this will look like a bottoming pattern as we continue to build a base around that level. But if we slice right through it, we could go down for the next bear market leg lower, which is going to be down here in the low 340s. So right now this is a risk off market, and you can stay short on the market while SPY continues to close below 390, because that is the level that defines the bear market, which means you can be shorting the market while we're below that level. Now, as you know, in the stock market, nothing happens in a straight line. So even though we are expecting to see that next bear market leg lower, do expect there to be plenty of ups and downs as we continue lower towards that path, which would mean it could take us all the way out to the end of November before we actually see that price target. So take it day by day and know these critical risk levels. And right now this is a risk off market while SPY is below 378. So you need to be very cautious trying to take long trades when you're in a downtrending bear market that just broke some very critical support after a very powerful rejection from resistance. So be very cautious unless you're accumulating for the very long term, which means you're holding for 12 months or longer. But as traders, you need to understand we are still in the bear market and still in a long-term downtrend while SPY is below 390. On the Nasdaq 100 triple Qs, we were down 3.43% today. So again, another very high volume rejection from that resistance at 282. Remember, the triple Qs never got all the way up to the bear, which lives at 293, and had that very strong rejection from the negatively sloping 50 EMA at 284, and then another strong rejection from 282. We're back down below the critical support because the triple Qs bulls needed to hold 272 and 267, and as you can tell, we lost both of those support levels and one very bearish engulfing candle today. So we're back down below all of the support, which very likely means we're going to retest the low at 260, which was the closing low, the 258 level, which was our 200 weekly simple moving average, and then of course the intraday low, which is down here right around 254. So there is going to be very critical test of the lows of this bear market before we can go any higher, and we need to stay risk off on the triple Qs while we're below the resistance trend line, which is going to be right around 278, and that critical risk level, which is our resistance at 282. On the Dow Jones DIA ETF, we were down 1.55%. And you can see that Dow Jones also has a very bearish engulfing candle because intraday we were above yesterday's high, and then we did close at a brand new daily low, breaking that support at 324. It was all on high volume selling, and we're right down below the support trend line, and the Dow Jones had this very vertical double bottom breakout move, which means we could retrace quite a bit and possibly even come all the way back down to fill the gap at 311. Watch that support at 319 along the way lower, and then of course the critical risk level at 312, but more than likely if we make it to 312, we will fully fill that gap below. Upside resistance will now be 324 and the daily high at 328. On the Russell 2000 IWM ETF, we were down 3.32%, and you can see IWM was rejected from that resistance trend line at 185, and again it was all on high volume selling. And we still do have the double bottom breakout while we're above 176, But if we lose 176, it is going to invalidate the double bottom as we lose the support and the support trend line, which means we'll more than likely come down to retest the lows around 163. So if you want to, you can stay bullish above 176, but you instantly need to get risk off if that level breaks down, because that will mean we are losing the short-term uptrend and we're getting ready for that next leg lower. The next upside resistance will be 183, the resistance trend line at 186, and that full gap close at 188. If we can hold above 176. On the ARKK ETF, we were down 4.83% today, and we continue to see that strong rejection from the negatively sloping 50 EMA and that resistance level around $40, and we're all the way back down to support at 36.5. Price actions below all the moving averages, so if we do continue lower, look for potential support at 35 and the previous low at 33.7. On the VIX, we were up 0.12% today as the VIX did not really show lots of signs of volatility because the VIX did not see any drastic increase even though the S&P 500 was selling off 2.5%. So why the VIX is not reacting to the sell-off is to be determined, but you need to understand that this is still a volatile market while the VIX is elevated above 24, and we're not going to see volatility leaving this market until the VIX gets all the way back down below 20. So yes, the VIX is in a downtrend in the short term, but this is still going to remain a volatile market as long as we're seeing high volume selling from resistance. On Bitcoin, we're currently down 1.59% as Bitcoin is starting to come back down towards this support zone at $20,000, which is the critical support that needs to hold up, or Bitcoin is very likely coming all the way back down to 19,000. Below 19,000, we'll be looking for the next leg lower at 17,000, and as long as we can hold support at 20,000, you can stay bullish, because we are very likely still trying to get up to the price target at 22,000 while Bitcoin is above 20,000. On Amazon stock, we were down 4.82% today as we continue to see Amazon in free fall, continuing to close below the lower Bollinger Band and getting very close to the price target at $88. Amazon is risk off and in a strong bear trend while it's below 102, so do not get bullish on Amazon unless you want to accumulate down here near the price target, or you need to wait until we get back over resistance at 102. This is a very clear downtrend, and it's a very powerful downtrend in the short term ever since that gap down after earnings. On Microsoft stock, we were down 3.54% today as we see Microsoft back down to the previous October low, which is right here, right around 220. And as you can tell, this is a brand new 52-week closing low. So this is exactly why you're seeing a lot of selling in the tech sector, which is driving the triple Qs lower. With big market moving names like Microsoft selling off, it is going to be very difficult for the market to break out of the bear market. And if we break down below this support at 220, the next leg lower in Microsoft is going to be down here right around 213. It's a downtrend in Microsoft until we can get back over this 20 simple moving average right around 233, and then getting back over the resistance trend line right around 242. On Nvidia stock, we were down 2.39% today, and intraday Nvidia did fill one of our gaps to the upside, which is just below 142, but instantly found resistance at that gap fill. And then we did see high volume selling all the way back down below the support at 134. Below 134, we could come all the way back down to 122 or retest the low around 115 to 112. So you will want to be a lot more risk off in Nvidia while it's below 134. On Tesla stock, we were down 5.64% today, and we did see Tesla continuing to get rejected from that resistance at 230, and we're back down below a very critical support at 222, which means we're more than likely coming down to retest the lows at 209 and 205. If we break below 205, look for that next leg lower down here at 186.5. And we're not getting bullish until we can break above that resistance at 230. On Apple stock, we were down 3.73% today, and Apple had a very volatile day because at one point we were all the way up here at resistance at 152, and then we saw the rug pull in the market moving name of Apple because we broke all the way back down below the support at 147 and lost the support trend line. Remember, this is a huge name in the indices and this moves the market. So with Apple losing support today, this is extremely bearish for the indices. Apple is very risk off while it's below 147 because it could be coming all the way back down to retest the lows at 138. And if we lose the support at 138, we could come all the way down to close the gap at 133. If somehow we do break back over 147, look for that very strong resistance at 150. On the financials, we were down 1.26% today as we closed the gap to the upside and instantly found resistance around the previous daily high, and we're coming back down to retest the breakout right around 33.5. On the industrials, we were down 1.76% today, getting a high volume rejection from that resistance just below 96, but as you can tell, we are still developing a bull trend as long as we can stay above $90. On the healthcare sector, we were down 1.7% today with that high volume rejection from that resistance at 134, and we're very likely trying to fill the gap to the downside at 130. The energy sector was down 2.41% today, getting rejected from resistance right around 91.5, but coming right back down to the support trend line. You can stay bullish as long as we're above 88 or down here right around 84. So jumping back over to the S&P 500, without a doubt, this is a very powerful bear market rejection from the critical resistance, which should come by no surprise because that is the level that defines this bear market. And that is exactly where we were expecting to see high volume selling if we were indeed going to remain in the bear market. Remember, price action and trend are all you need to follow in this market. And right now we are still in a long-term downtrend and price action is screaming high volume rejection from critical resistance. So we are still in a risk-off bear market until we see SPY getting a decisive breakout back over 390. Remember, the bulls have everything to prove because this is a bear market, so the bears have all of the advantage with the price action and trend as long as we're below that critical risk level of resistance. So continue to be patient, have great risk management, and make sure you're staying disciplined. That way you can remain a profitable trader. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. If you want to learn more about Bank or want to subscribe, just click on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.